Good afternoon, everyone. It's Coram and Carson here with a look at the market for Wednesday, October 25th, where we're seeing a bad market get uglier.
Yeah, really did not look, wasn't good action today. Google was a big part of that. Also wanted to look at Vertiv and CME Group.
Okay, we'll take a look at those three stocks. But first, let's analyze the major indexes. The Nasdaq today down 2.4%. We had the S&P 500 off by 1.4%. The Dow down just 0.3% today. The Russell 2000 down 1.5%. So Ed, the Nasdaq taking the bulk of the beating here today and undercutting its rally attempt lows.
Yeah, the rally attempt hadn't been that impressive to begin with, and yeah, the rally attempt is now over on the Nasdaq and the S&P 500, breaking below there. S&P is now decisively, or at least clearly below the 200-day line and closing pretty close to lows. Yeah, it's still, this is the support area for the S&P now. The Nasdaq just getting to the 200-day line, and below that, it would still need to get a fair amount of distance to get back to its spring or early 2023 highs, but those would be areas you could find support. Really not looking good. I mean, it really heavy selling. Earnings didn't cooperate. Yields were rebounding. There's just this. We don't know where it's going to go here, but right now the trend is down. We are in a correction. It's not that complicated. We're in a correction. We're going down,
right?
And we don't know where that'll stop.
And technicians in market cycles of the past have pointed out this concept of a three waves down. We see that throughout history. And that was one thing that we were pointing at, there being the potential for that when we first came down to that 13,000 level and undercut, that we could see a third wave. Now, how far down that leg down goes, or if it evolves over time, because I know during the bear market we had three waves down, but that wasn't the end of it. We did almost undercut those lows again, but that is one phenomenon that is seen in market cycles. What are your thoughts on that, Ed?
Yeah, I mean, markets tend to, repeat or at least rhyme with history, and so this is normal. This is not unusual. And fact is, we don't know where it's going to bottom. I mean, this might be an area where we find support, or we could keep on blowing lower. Obviously, earnings, obviously, Treasury yields, a lot of things going on right now that could trigger it. And I think that's like, you want to know that kind of stuff with history, but it's also as a practical matter in the here and now. There's not much to do in terms of, you just want to stay out of the way until we do get that turn.
Right, exactly. And you mentioned the 10-year yield, Ed. That is a huge factor in the market right now, in addition to disappointing earnings from Google parent Alphabet today, disappointing reaction. But this is huge right here. This is kind of what it's all coming back to.
Yeah, I mean, this is like, even when we get past earnings season, this is still going to be with us. So yeah, we're not at the levels of that 5% or 5% plus that we sort of got to early on Monday, but we're up for the week once again. I mean, it's like, all said and done, we keep on rising. I mean, that's just really hard for stocks to deal with, especially growth stocks, until that ends. At least that ascent ends, and not just for a day, not just for 2 days, but for pretty much for an extended period. The market's really going to have trouble making a lot of progress.
Right. And so in terms of the rate hike path, it seems like that's what we're waiting for. We're waiting for at least a stop to the rate hikes, right? If not, looking ahead to maybe potential cuts.
I mean, the rate hikes are part of that, but really the 10-year Treasury has been rising sharply, even though the odds for another rate hike are pretty low. So it doesn't. I'm not sure how connected the Treasury yields are to the Fed. It seems to be more about deficits, more about long-term fiscal policy, because this is really squeezing. I think the Fed is taking the cue from the 10-year Treasury yield rather than the other way around.
Right.
If the Fed does cut rates, it'll probably be because the economy is coming under such pressure because of these rates that it starting to buckle, and inflation is coming down, and the economy's risking recession. So that wouldn't be a great scenario either, or at least not up until that point. So it's a tough scenario for investors possibly for a while here.
Right. Yeah. I guess it'll be interesting to see how the picture changes for the Fed, how they may react to what they're or not to what they're seeing here, and to continue to see this unfold. Okay. Next on the list, let's take a look, brief look at the Dow. So here's 0DJIA, held up the best today, but still looking very weak here, Ed. And I know you've been keeping a close watch on small caps. And here's IWM, the ETF that tracks the Russell 2000, heading lower yet again, and looking pretty close to undercutting its prior lows here, if not already undercutting those levels. So 163 here today. What's the low here? So 162.50. It's getting awfully close to an undercut.
Yeah, so it's a 52-week low, as you say, getting ready, close to getting back to the lowest since 2020 without much effort. One thing on the Dow is that technically the rally attempt is still ongoing. While the S&P and Nasdaq are back to zero, technically this was day 2 of the rally attempt until it undercuts there, but that's just not, it's not great action, and to have the S&P and Nasdaq down, not really what you want to see, but technically that rally attempt is still ongoing.
Mm-hmm. Yes. Okay. Good point there. Let's take a quick look at some breadth measures. Here's a look at SPY, which we looked at the S&P 500 earlier, but down 1.4% today. RSP, the equal weight, undercutting lows, continuing to head lower. It's been looking weaker, less of a decline today, Ed, but it doesn't seem like we can find much comfort in that.
Yeah, so it didn't, it didn't underperform today because of the mega caps that were tumbling today, but it's almost at a 52-week low. So it's really just terrible action for this. And again, we saw that with the Russell. The Nasdaq and the S&P look better than the underlying market. So it's just, there's just nothing really good out there. It's going to take a lot to get that to repair. You can imagine the Nasdaq or S&P bouncing back with a few good days. And it's like, oh, okay, that's starting to look better. But there's a lot of work that some of these other indexes or these ETFs need to have.
Mm-hmm. So speaking of ETFs, let's check in on two that we like to look at. Here's SMH, which represents the chips, now testing its 40-week line for the first time this year, Ed. And taking a look at the daily chart here, we are getting it to undercutting for a third wave down, it looks like.
Yeah, so it's that was looking strong a couple of weeks ago, and now suddenly it is not. And obviously, it's just not a whole lot going well with the market.
And an outsized decline here today, too, I'll point out, down 3.9%. Was this the Texas Instruments impact here, you think?
I think there was that, and obviously other things like NVIDIA was a big loser today. And there's a lot of things. I mean, there's a lot of things that were really selling off today. Weren't finding many safe havens in the tech sphere for sure.
Right. And here's IGV tracking software also with an outsized loss today, down 2.7%. Still, for the moment, holding above its consolidation lows, but we'll have to see how long that lasts. Now let's take a look at some stocks. So we want to start with Google. Big gap down today, closing down 9.5% in huge volume. And it was the cloud business that was disappointing here, Ed?
Yeah, they actually beat overall views. Advertising was pretty strong. They beat on earnings. And this was one of the leaders. This is, look, you can see that RS line, it's real steady. And you're thinking, okay, this is institutional quality. This is not one that's going to plunge. Whereas some of these other stocks, you can imagine, these high flyers, they could fall 20%. Okay, this didn't fall 20%. This was an enormous drop for a $1 trillion company to fall 9%. Knife through everything, a 4-month low, huge volume. I mean, the week is already above average volume, and we're only through Wednesday. It's just so this is what can happen in earnings, and this obviously triggered a lot of selling in other stocks. Even though Microsoft had good things to say about cloud, you saw Amazon tumbling, we saw Meta tumbling. We'll see how Meta does tonight. Just a whole lot of selling because of what Google had to say, and there's other earnings too. But Google was one of the just really seemed to trigger a lot of selling in tech, and this is going to take a lot of repair work. This was looking so strong. And now that is really, wow. It's just, it just shows you the level it is. It only missed by a little bit, but it was enough to trigger. That's the kind of market it is right now.
Exactly. And needless to say, this triggered a sell signal with that heavy volume
Yeah.
decline and a big break below the 50-day and 10-week. We'll have to see how it finishes at the week, but it's not looking too good with it down 6% below the 10-week line as of right now. We also want to hit on VRT. This was a wild stock today in reaction to its earnings report. And overnight, things were looking good. The stock was up, 13% or something, Ed?
I
And
saw at least that much. Yeah.
at least that much. But the intraday chart on this thing, crazy volatile. It was actually halted within the first, I think, 10 minutes or so of the trading day for a bit, and whipped around a lot. And this is a stock that we thought had, and maybe it still does, but had the potential to be a true market leader with the fantastic move that it's made this year, with the hopes of this being an AI related leader with strong growth. But it seems like character change is unfolding, at least for the time being here, Ed.
Yeah. I mean, and this is also just shows you why you don't want to be very cautious about buying in the free market, about buying right at the open. Because if you bought in the free market or bought at the open, you were down, like 15% within a minute. And while there was a bounce back for a moment, it fell back again. Maybe, over some time, this could repair itself. I mean, this is still sort of within the flat base. I mean, it's not crazy. It's not finished. But it's just, that's the kind of market it is. It had beat on EPS. The revenue may have been just a touch light, depending on the estimate. And you can even see the RS line didn't even fall that much today. That, that's such an ugly action. I know it was only 4%, but it's still really ugly action. But that's where the market is right now. And so, this is why you also just be cautious heading into earnings, why you don't want to buy early. There's just all sorts of warnings, even with one of the big 2023 winners out there.
Mm-hmm. And let's round things out with a look at CME before we check in on Meta and ServiceNow, because we want to look at those too. Here's another earnings reaction to check in on. Closed basically flat. And this stock in the opening minutes had a big gap down, but it pretty much immediately reversed. So if traders were looking at the intraday chart on earnings, and I know there are some traders out there that are saying, I'm not a day trader. Why do I need to be looking at intraday charts? I would say the one exception for that, even if you do have a longer holding style, typically as a position trader, it's going to be earnings, right?
Yeah.
Looking at the intraday chart just to see how things are shaking out, and seeing what that first 5-minute bar looks like. Where does it close within the bar? If it gaps down, does it hold that low? If it gaps up, does it hold the gap up? All those kinds of things. So with this stock, it bounced back immediately, essentially right after the open, Ed.
Yeah, so this is a reason maybe to wait just for a few minutes. Like if you had owned this on the breakout and you're saying, and if you decided to hold it, it would have been tough because you wouldn't have had much of a cushion. But it's just like, just wait for that minute or two to see, at least a minute or two, see if things are going. This is still acting well. The earnings were just a little bit above views. I think revenue was in line. So it wasn't a great report. So you could have imagined it would sell off in this environment. But it bounced back, holding the 21-day line, RS line at a new high. Decent numbers. This isn't like a barn burner, but it's a solid defensive growth name. In really nice reaction. Again, just want to show a little bit of patience right at the open because there's such whipsaw action at that time.
Yeah, and I think this is also, a lesson here is traders should probably treat a VRT differently than a CME. Just, given the personality of these two different stocks are very different. So maybe having a 3 to 5% cushion on a CME depending on what the market maker move was, it was probably a little different than VRTs. Just throwing that out there. So that's also a factor as well for should you hold into earnings or should you sell, depending on your risk tolerance.
And the thing is, though, is like you just have to remember is, especially in a correction, that the risks are even more out there. I think people would have been surprised. Google falling 9%. That was probably beyond what people thought was likely to go either way. So it can happen. But VRT, you could have imagined a scenario where it was down 20, 25% because it's had such a move. I definitely want to know the character of a stock. You're right.
But you're right too, knowing the environment that you're in, because even the strongest of stocks could have a really difficult time. Okay, let's check in on a couple of earnings movers after hours. And of course, if the VRT example wasn't enough, here's a further potential warning that just because we see a stock up after hours doesn't mean it's going to be up in the regular session tomorrow. But here's a look at Meta. It does look like the initial reaction, Ed, here is positive, with shares up about 4% after the bell on mixed results. You have more details for us?
Yeah, it looks like they beat easily on EPS. And actually, I thought at first that they missed on revenue, but it looks like they beat on revenue as well. I will also say is that the silver lining on Google's dark cloud would be that, hey, look, Meta fell 4% in part because of Google. I mean, really, if this were yesterday, maybe Meta's not going anywhere. Maybe it's flat. But it's so maybe some of the bad news. Look, if Meta missed badly or something, but there might be that potential, because obviously some bad news was put into the market. There may be a lot more, but that's just a tiny silver lining that might be there.
Yeah. Okay. Well, we'll have to see if it can bounce from this 300 level and the 50-day line in tomorrow's session to clear a trend line. We will have to see. The other big one out after the close that we've been keeping an eye on is ServiceNow. This is in the enterprise software group. Also up about 4% after hours. Today, the 50-day line was around 564. So it's trading around 553. And closing today right around the lows of the base. But do you think that this might have any potential ripple effect on other software stocks, or does it remain to be seen?
I mean, it might have some positive impact. I mean, it helps that Microsoft had pretty good numbers. So it's like, well, wait a second, maybe things aren't so bad. And like you could have that correction figure. It's bouncing back. I suppose there could be early entries if it got above the 50-day line and such. Problem is that, you'd want to see, again, the market's not with your side, and it's just not there. So you're adding risk upon risk. It's one thing to be aggressive, but it's sort of like, I'll be an aggressive driver. How about doing an aggressive driver at night? How about an aggressive driver when the roads are icy? I mean, it's just like there's a difference in being aggressive and this is not, the road conditions are not particularly good for aggressive behavior.
Yeah. And even something like Meta, I feel like it's totally different if you are sprinkling on a few shares tomorrow, if it's holding up, if you already have a big cushion on a winning position with something like this versus initiating at a new buy. So something to think about there. All right. Well, that's it for today, everyone. Thank you for tuning in, and we will be back. Ed will be back with more tomorrow morning on IBD Live with the crew. So we hope you join us for a breakdown of the market action, stocks on the move, portfolio strategies, and more. And we'll see you there, investors.com/IBD Live for all the details on that. See you then. And we'll also see you right back here tomorrow at the close.